Satyanarayana Raju, Managing Director and CEO of Canara Bank, joins us now. Let's talk numbers. And Mr. Raju, good morning. Thank you for joining us. First, let's talk about net interest income for the quarter. It has declined by 2%. NIMs for the quarter are down by 15 bips sequentially. What led to this decline in NIMs, and how should one see them going forward?
See, NII decline is one of the reason is cost of funds. The cost of deposit is increasing quarter on quarter. But the second one is NII decreasing. Actually, one positive thing what I want to share it with you is the interest on loans and advances has a steep increase is there because the average advances are gradually, steadily increasing it. But the last quarter, quarter on quarter basis, sequentially, last quarter we got a benefit of one time interest benefit on interest on NPA of around in one account 320 crores. Generally, in usually every quarter we get interest on NPA around 400 to 450 crores. The September quarter we got 780 crores because of that 320 crores from one account. That is one time. This time that is not there, but still we could recover around 520 crores. That is one impact. The second impact is when we have ample liquidity in the system, we used to participate actively in the call money markets. There, the other interest income we used to generate it. But now, since our credit is growing steadily at 11%, and raising the deposits to meet that requirement at a high cost is not so comfortable for us. So we have grown only at 8.5% our liabilities. To that extent, our call money operations have come down. That is another reason. That's the whatever. But otherwise, steadily our interest income, because our interest income on loans and advances is a higher level. That we want to focus on that. That's why we focused on that. And that is considerably going.
All right. Good morning, Mr. Raju. This is Shrishti also joining in. Just taking the point forward on the NIMs. You have guided the NIMs in the range of 2.9%. But currently, if we see, we are almost 70 bits behind. So what are the factors which will push the NIMs towards that guided range in Q4, according to you?
So cumulative, if you see that NIM, we are at 2.83. So I given that advice for this guidance for this entire financial year. That's I have given a guidance of cumulative. It is at 2.80. So though the third quarter the NIM has come down, fourth quarter also may maintain at the same level only. We may not further down from that. But the average, if you take it first 2 quarters, whatever the benefit we got it, that average NIM will be, cumulative will be, it is around 2.80.
So asset quality on the other hand remains strong for the bank. Recoveries have led to an uptick in the PPOP, which is the pre-provisioning profit. But if we were not wrong, do you think that Q4 will remain strong in terms of recoveries?
Yes, we are very much confident that our slippages, whatever the initiatives we have taken last 1 year back, both in the underwriting standards or controlling the slippages, collection efficiency, both in the SME cadre as well as in the NPS, that has started giving results. If you look at that, the September quarter also, our slippages are much lower than our recoveries. Even the December quarter, our recoveries and upgradation is together, it is 3,600 crores. As against that, our slippages are only 2,400 crores. Straightforward, we got a benefit of 1,200 crores. I'm seeing that the same tempo will continue in the fourth quarter also.
All right, but your deposit growth is still a little below the guided range of 9% for the quarter. So what changes are you planning to imply in order to gain traction here?
See, actually, this is 8.4 or 8.44%, whatever it is, as against the guidance of 9%. It is an intentional growth. Of course, CASA, we are trying hard to increase it, but that's there we are finding it difficult under the present high interest rate regime. But the term deposits, we don't have any problem in raising that. The term deposits are garnering any time. Only thing to have a better control on the expenses. So we are using that our window with the RBI by excess SLR, whatever the securities are there, we are pledging and taking the benefit of that window because we have 8% excess SLR. That benefit we are taking and raising the funds at RBI at 6.5%, whereas the deposits rate is almost If you see that the retail term deposits, if you want to go for the longer term tenure, it is costing us around 7.3 to 7.4. If it's a bulk deposit, it is costing us even this current quarter, it is gone up to even 7.9, 7.91%. That's why last quarter we have taken intentionally that at 8.5%, but 9% guidance we can achieve it easily this quarter. We already now diverted our machinery towards garnering the deposits. December quarter itself, we introduced two long-term tenures for retail term deposits, 2 to 3 years and 3 to 5 years, and we offered a attractive rate of interest of 7.3 and 7.4. With that, last just 1 month, we could garner 8,000 crores. We are sure that the 9% growth we can achieve in this quarter.
Also, CASA ratio declined now to 30%. Do you think this will add some pressure on NIMs in coming quarter?
Sure, sir, it will be there. See, higher the CASA ratio, higher the benefit to the bank. When your CASA ratio is under stress, it will have its own impact on the NIMs. But with that impact only, we could do that. The cumulative is 2.83. So, but our efforts are continuing. We are every quarter we are coming out with targeting a new products, new launchings, targeting the sections of the people, new initiatives. Those are all initiatives are giving a good response from the people. Whatever the new products we have launched last 1.5 years or 2 years, it has garnered us almost 18,000 crores in the SB individual itself. But the problem is existing balances diverting to the term deposits. That is because when a higher rate of interest regime, nobody will keep beyond the required amount in the SBA, because there the rate of interest is very less. And nowadays the technology is so efficient. People can on their own, they need not approach the bank or the branch to shift that surplus money in the savings account into a term deposit. They are doing by sitting at their house through their mobile or net banking. That efficiency, because of that efficiency platforms, technology efficiency platforms, this CASA, retaining the CASA is a tough task for us.
All right, but Mr. Raju, your CD ratio is now at 77%, and the last time we interacted with you, you did mention that it can move towards 77% in the coming quarters, and that's what we see happening. But the question is, do you think it will go up even further from these levels?
Sir, as on date, the SLR is 18% we are supposed to maintain, and the CRR we are supposed to maintain at 4%, total together 22%. So that's the maximum cap we want to keep it in our level is 78% for CD ratio. That is our appetite. Though we have additional surpluses, funds, resources like own funds or infrastructure bonds or refinance from NABARD and SIDBI, but that all we want to keep it as a cushion to play in the call money market. Whatever the benefits we want to take it out. But we don't want to cross 78% at this moment. So we have that cushion. So here afterwards, this quarter we can see that we may achieve at 77%. That 1% we may keep it for next year, but thereafterwards our incremental credit and deposit growth will see that it matches 100%.
In terms of a loan book, it is largely driven by retail segment in the last 2 quarters, while agri has taken a backseat going ahead. Which will be the key segment to drive growth? Will RAM remain 57% of the total book?
Actually, we aim to reach the RAM book at 58%. Still, there is a scope to grow there. So for that thrust area, what we have taken retail and MSME. But the agriculture is core agriculture. There is a steady growth is there 10%. But when you look at that, the gold loans in the agriculture that we are discouraging now in the metropolitan areas. So that's why that is taking a little bit hit on that. The growth it is looking at that it's a muted growth. But the same to compensate that the same borrowers in the metropolitan to meet their requirements, we introduced a secured personal loan against the pledge of the gold in the retail segment. That has got a good traction and it is giving a good result for us. That is leading to that our retail growth. So now retail we have reached to the 19%. We want to cross it around 20 to 23%. Ultimately our RAM we want to keep it 58%. Our MSME current year we are expecting that it may touch 10% year-on-year growth. So ultimately we want to keep it corporate at 42% and RAM sector at 58%.
All right, but with this, Mr. Raju, we'll let you go on that. I appreciate you taking the time out and speaking with us. But with this, viewers, let's...
If you like this video, then like, share and subscribe to ET Now.